Hey guys, today we will look at how big institutions orchestrate certain sentiments. So we are picking the 4th July 2025 BNF Bank Nifty trading for our example. So a bit of a disclaimer, do your own analysis. We are just data scientists trying to understand the mindset of institutions and share our knowledge just in case it helps you. Uh, you should take whatever trades you want based on your own analysis. We are just YouTubers and data scientists just putting our understanding of the market. So the first question is what happened the entire week? So this is a 1 hour chart, and you see the month of July. The entire week, the institutions kept shorting calls. Okay, they kept shorting calls. So the sentiment is negative the entire week. Institutions mostly they will not carry that big baggage over the weekend because anything bad can happen over the weekend, or any good news can also happen. But you something bad can also happen. So these guys have taken a short position, and they want to do a short covering on Friday to get rid of the big baggage they have. But entire market knows that the sentiments are negative. So now how to orchestrate certain things? So this is your 15-minute chart, and I will blow up this 4th of July. Okay. Now uh, you have kind of sold 100K packets of Maggi. You have already sold. Okay. You told that you will be able to sell something. Now you have to do a buyback. Shorting means you told you already sold it, assuming that you will make profits. Now you don't want to hold that position over the weekend, so you will do a short covering. So short covering means you now have to buy calls. In order to buy calls, somebody should be willing to sell calls. Okay. So what's happening is you as an institution, out of 100K packets of Maggie that you have already sold, you try to buy 10,000 packets. You just test the market. So institutions are testing the market. What happens? The moment they test it, they see the sentiment is negative and it goes down. Okay. So now they want to. So it goes down means uh, there are buyers. There are buyers for your calls. The calls that you have shot, there are buyers. So you see this. So now they release the next lot. So the next lot they release. So they have taken out 30,000 packets now. So they have bought 30,000 packets, and you see this. The candles becoming smaller, and again, uh, retailers are thinking, hey, and the market is negative. So now what happens usually is the moment it crosses this, the retailers think that it's a positive sentiment, okay, and they try to buy the calls. So in order for you to get heavy volume, now you have to get the remaining 70,000 of or 60,000 of packet you have to get out. So what they do is they now orchestrate. The orchestration comes into play so that people should think that okay, the market is going to go down heavily, and they will all get into the position of shorting calls. So they themselves orchestrate. The institutions they just sell 20,000 quantity, 20,000. They do sorts of calls, say approximately 20,000 packets of Maggi they short they sell. Okay, that creates a big downward move, and the retailers also join in, and a lot of them joined here. Okay, so now the liquidity is created. Liquidity is created to get out for the big institutions. So now they have that volume generated. Now they can get rid of the entire 60,000 packets of Maggie they had. They just did this is short covering. Now, if you're thinking that the market is moving up and on Monday I should go in the positive move, I should buy calls. No, we are not still not clear. You have to wait for the signal. This is just short covering. So whatever they bought, see if I show you on 1 hour chart, whatever they bought, they shorted the entire week. They have just done a short covering. They have bought it back. So due to this short covering, you see this move. That's all the story how they orchestrate things. So if you go on a 15 minutes candle, where do you see the orchestration? The orchestration is right here. So here they try to get out, but they are not able to get out. There is no liquidity. So if there is no liquidity, they got to orchestrate. Or to orchestrate, they create a false narrative. False narrative, what it means? They will take the market big way down, three big candles. So now this FVG is created, fair value gap. This fair value gap is created. So now if you wanted to trade, uh, till what time you could have waited? So what I would have done is I would have got to this 30 minutes chart or 1 hour chart, and I see a good support here even on the 30 minute or the 1 hour. So you always have to go one up, okay, and then see if you are getting some direction there. So here we were getting a direction, okay. The moment it came down, so we are trying to see if this is the most likely position where it can take a support. So it can take support from 30 minutes standpoint, 1 hour standpoint. This looked great. Let's see from 2 hour standpoint what is how is it looking. So even from 2 hour standpoint, this was great. So this could have been a good position to enter first. Okay. Now if you go on a 30-minute candle, this is where uh, a buyback would happen, a short covering would happen. It would get triggered here, and a lot of people will get trapped here because they would think that the market would push the boundaries and go down. But it's Friday. People don't want to carry their excess baggage over the weekend. They don't want to be under tension, so they just did a short covering. Okay, so how does the higher time period chart? This is a daily chart, 1 day chart. So how does this look like? So in simple terms, market took a resistance here, it came down, it took a support and went up. So this support could also be because of short covering. So we have to see on Monday whether it breaks this and creates a good candle on top, and then we can see whether the sentiment is positive or not. Okay. So if I see the higher time frames, it is kind of trending up here. Then it created a liquidity scenario due to war or whatever, and then again it went up. This created again out due to war. It created a resistance, strong resistance, came down. And if I go on a higher volume than this on a weekly basis, or let's go on a month basis. So on a month, you see uh, this is what is happening. So this was a good position in 2025 to buy. Okay, and it is still carrying up, and there is a resistance here. Okay, this is the highest point in the last from I would say 1 year. This is the highest point. So let's see whether it is able to break this, okay, or it continues here. So my gut feeling says that it probably should come till this point. So if you see here, it it either tests the CPR or it is testing the moving average. Okay. It is staying in the moving average, then it crossed the moving average, created a liquidity scenario here, and then it moved up. So right now on a monthly chart, this is negative. It will need some liquidity to move up. So the chances are it might come down from here. Okay, and it creates that liquidity to move up. It might happen. We don't know. And same thing with Nifty. It is moving up this way, and it bought a good. It came to a good point here, and then it took that liquidity. It went up. So let's see whether it is able to cross this line or not. Now, see, Nifty Bank is strongly affected by HDFC Bank. So even HDFC Bank, if you see, it is at the highest point at this point in time over the span. And what's happening? How do you read this? Is it is still following the moving average here? So it might come till the moving average or sometime like this is a good level to be tested. This one here. So I would say I would put HDFC Bank and low is 1908. So 1908 would be a good point to be tested. Right now it is hovering around 19. Uh, it went high as this and closed at 1989. So let's see. Uh, it has already taken some liquidity here and it has moved up. So let's see how it behaves. But on the 30-minute chart, if you see the 30-minute chart here, this was a good support, and it again, yesterday, if we wanted to trade in HDFC Bank, we could have taken this point as a short covering point, and we could have bought calls, or we could have bought this share itself, the stock itself, at 1980, and it went all up high to 1994. So 14 points you could have made if you buy the 1,000 stocks, 14,000 rupees in a day you could have made. So where we would, if we want to trade HDFC, where we would want to trade. So if you want to trade HDFC, we would not trade now at this position. We would definitely not. So we will see if it goes back till this point, and we'll have to see if it breaks this. If it breaks this, then we short it. But if it goes uh, till this point here, or even this point where it has a resistance, so this could be a good point to short. But let's see. So the trade should not be put in the random manner. You should watch the charts and see what is the story it is telling. The chart, is it telling you some story or not? That is something which is very important to understand. So currently, if I look at the chart, just in the month of July, it is like it is trying to go down. So mostly it might take a resistance here, or it might take a resistance halfway here. So currently, what it has done is it has tried to fill this FBG gap slightly in this one, and then it might go down. We don't know. Okay, so we just saw how the orchestration works, how big institutions will try to orchestrate. So like we always say, a disclaimer, do your own analysis. If you want to analyze and understand how to analyze the chart, so you may go through this series. And we are just data scientists trying to understand the mindset of institutions. You should uh, put a trade only if you yourself have a trust in it. You should not put a trade because someone on YouTube or someone on Insta or X is telling you, or WhatsApp they are telling you. You should just trust your own self. So here we are on 4th of July. We just try to understand 4th of July trading Bank Nifty. How did the market behave? We looked at higher time frames, then we looked at lower time frames, and we also looked at some key banks which have a direct impact on Bank Nifty. And then accordingly, we try to look at where the market, how the market is behaving, and what can be the future. Nobody can predict the future. That's what. So it is always it is a probability game. This is all about probability. So stay tuned, stay focused. We will again meet you in the next part.